me, I'm good like when it comes to reading lips. You understand? Because that's how we do my practice then in school. You understand? When complimenting me, like
Okay, I'm just telling you.
simple. Stick to what we taught you, right? Stick to what we taught you. And you as a trader, how do you benefit from this, right? Inside ball. Are you asking me?
No, yes, sorry, you will lose.
Sometimes you bring investment, sometimes you vex me, sometimes you good enough. That's all we manage. Hi guys, today is day 7 of me teaching my students how to trade. Yeah? How is the journey so far? Okay, and our today's topic is what?
Confluences.
Confluences. And in trading, confluences are what give us like more confirmation to take trade in a particular zone or where we're looking to take our entry from. Yeah. So those confluences are what gives us more confidence to take that trade when we see them on the chart. Are you ready to learn?
Yes.
All right. Just like I said, we are having like confluences today in the class, right? So and then we already did break of structures, and you already know how to spot your bullish order block and your bearish order block whenever you see them on the chart, and you know how to identify the market that's what change character. Like for example, if your trend is moving to the upside, if you start moving to the downside, do you know how to spot it?
Yes.
Good and fine. So now, after order blocks, the next thing you should be looking for before your order blocks are what? The confluences. So now we have 3 types of confluences, which is fair value gaps, imbalance, and what? Liquidity, right?
Yes.
So these are the 3 major confluences we're going to talk about today, and we're going to do some illustration. Then we're going to look for them on the market, in the real market, because at the end of the day is what we are looking for this knowledge to apply it on the market to make what? Money. Simple. Value gap, also known as what? FVG. So whenever you see what FVG, you just know that like a trader is trying to say that okay, is a fair value gap, right? Good and fine. What are fair value gaps? Fair value gaps are those gaps that market leave, whenever, especially when it gives an impulsive move, the upside or to the downside. Now, whenever there's an impulsive move, markets tend to leave fair value gaps. So fair value gap are those inefficiency, those gaps, in the market. And most of the time, market tend to come back to that fair value gap since it's an inefficiency. You know what inefficiency is?
Yeah.
What is inefficiency?
It's like no function or
something that is like that's not like perfect. Something that is not balanced.
Yeah.
So market tend to come back and fill in that gap, that inefficiency before it continue going its way. Right?
Yes.
So for example, now let's say for example, market is moving to the upside. Right? Like this. And then just like I said, you get fair value gap or imbalance whenever there's an impulsive move. Let's say for example, market now move like very hard to the upside, then it came down, then do something like this, right? Now, this impulsive move, if you check at the body of the candle, you'll see your inefficiency. So you highlight that inefficiency, that which is that fair value gap in this case, right? Good. And then you wait for the market to come back and fill in that gap it left, right? Because that inefficiency will serve as magnets. So draw the market down, come and fill in this inefficiency or this fair value gap before you continue going your way. And you as a trader, how do you benefit from this, right?
Yeah.
Now, whenever you see fair value gap, you will now look for if there is an order block below it, right? If there's an order block below it, then in this case, you draw your break of structure, right?
Yes.
Good. And you can't draw another block without drawing a break of structure first. Then you now look for this case now. What candle are we looking for to mark as our order block?
Green.
Or a bullish order block, you cover the last red candle, not the last green candle. That's in the back of your mind. It's a psychological trick, right? For a market that's going up, which is you are looking for a bullish order block, you cover the last red candle, not the last green candle. You've done this, that shows that you are not like checking your work back in this form. Now, in this case, we've covered what candle. What candle did you cover now as our order?
Red.
Last red
Candle.
Now, what are we to do? We are to wait for the market to come back to try and fill in this fair value gap. And when market fill in this fair value gap, if you go down a little bit to our other block, then we'll take our what? Long. As we take the trade, we'll take long. Or there's something we call limit order. Limit order. When setting the trade, you call it what?
Limit order.
What do? You check which price is this. This tip of the order block is on which price. In this case, is at 4330. You go to your app or your exchanger where you trade, you set limits, and you set this price. So even if you are not there to watch the market come in, like even if you are not there, you went to like sleep or something, and the market comes down to this zone, it will trigger automatically. It will trigger automatically, even if you are not there. Then if it triggers automatically and the markets continue going up, what will happen to your trades?
You'll be in profit.
You'll be in profit. And if it tap and it's continue going down, what will happen to your trade?
You lose.
Are you asking me?
No, yes. Yes, sorry. You will lose because it has passed.
Because it has passed your entry level. Your entry is here and market went below your entry, you start seeing loss. Until market hits your what? Stop loss. Or market can show you small loss. If your stop loss is below, market can show you small loss. But if market should retreat up, what will happen to your money?
I don't know.
If market should, from here, market data, you are seeing loss and then it went back up.
You'll be in profit.
You will now be in what? Profit.
Can I ask a question?
Ask.
If you were like in profit and then it passed and you're in loss, if you come back in profit, will it still be the same amount as you were in profit before?
Yes.
Okay.
That's it for fair value gap. Now we are going to the real charts to look for examples of what? Fair value gap. We have this other block here. That's why this block of structure. Yes or no?
Yes.
This block of structure. And we have another block of structure here. Yes or no?
Yes.
Good. And this block of structure, where is the last red candle? This is the last red candle, right? So on a normal day, you're supposed to draw here as your other block here. But you know you won't do that. Why? Because there's one impulsive candle that appears here that gives this what?
Imbalance.
Imbalance, right? Imbalance. We'll pick imbalance, we'll explain. I'm happy that you know that imbalance is bigger. Why fair value gap is smaller? Right? There's this imbalance. So are you going to still choose this one? Because there's imbalance under it. So if you enter your trade from here, there's high chances, since we said it's like a magnet. So if I look about imbalance, they're like magnets. Market will always come down to cover it. So what are you going to do? You look for the next red candle, which is this, in this case, right?
Yes.
Okay, let's cover it properly, right? Good. You understand? So now this is supposed to be your other block, but because there's an inefficiency under it, you pick the next one. Now what happened? Markets came down and filled the gap. Look at the gap here, right? Let's carry this rectangle too. Let's highlight the gap. Markets came down and what? Fill in the gap. And what happened? Markets continue going up. So when market break your recent high, they just take your what? Profits. Good. And in the process of market hitting the previous high, what happened? It gave us a new
imbalance.
A new what?
Break of structure.
A new break of structure. Good. And this candle that broke this previous high, what happened? It was a big candle. It was a big candle. And what do you expect whenever you see a big candle? What do you check for?
Check for imbalance.
Imbalance or fair value gap. Whenever there is an impulsive what? Move to the upside or to the what? Downside. Good. And now we are here, right? Break of structure. And now what should we look for now? The next.
We look for the last red candle.
And that will serve as our what?
That block. Bullish order.
cover the last red candle to get your what? Bullish OB. You understand? Bullish what? OB. Just your OB. Yeah? This is a bullish order block. This is a bullish order block. And now, let's look for the confluence I taught you now. Let's look for it if we're going to see it before this order block. Is there any confluence?
No.
There's no any confluence here.
There is.
Are you asking me?
There is.
Where is it? And what confluence? This is our break of structure. This is a big candle, and after a big candle always leave what? Fair value gap or imbalance. And now we have our break of structure, and this huge candle gave us this particular fair value gap here. Alright, this part of some of the red candle came and cover some of the parts. And this is our gap. So this is our confluence, the fair value gap. Right? So what we're expecting is for the market to come down and fill in this gap. Market is currently around here, but we want the market to come. This fair value gap will serve as magnet to draw the market down. That doesn't mean you will just short the market. We want the market to come down, fill in this gap, tap this order block, then we'll take our what? Our long position, then we'll take long. Or if you like, you can set limit order. Set limit order at this particular price. So if the markets come here and you're not looking at the chart, it will trigger automatically. And then you start seeing what many. That's if the market start going your way there.
Yeah.
Good. I don't know what you went here and you're looking for.
It's because when you said what type, then
it's simple. Stick to what we taught you, right? Stick to what we taught you. Simple. I said anything before the order block. So you look for what is close to your order block. You even went above the break of structure. You don't go above the break of structure. You go from here. Anything that is after this break of structure, that's what you are looking for. I don't know if I'm making sense.
Yeah.
You have eyes. Now, whenever the inefficiency, whenever the gap is big, is an imbalance. Whenever the gap is small, right, is a fair value gap. So whenever you are drawing and then you see that it's small, the aim is you should understand that this is an inefficiency. That's the aim. That's just the aim. So once you understand that and you know that it's a confluence, you can add to your trade to make your trade very strong, like to give it more probability, right?
Yes.
Then that's what you really need. Yeah? Good. If you know that, you are smarter than 90% of the people.
Yes.
Yes.
And now it's one last question. This market price here. You said this is your entry price. What of this? What do you call it?
The one down?
Yes.
The one down is not your business. The reason why the one down is there is because you are sticking to covering the last candle. But what really matters is the tip. Yeah, the price you are willing to enter the trade from. Any other thing here is just a range. So if the price is here, you can take the trade. If the price is here, you can take the trade. But you are setting limit order, it should be rare. But if you went down below this and you are seeing it, do not take that trade. Because it has broken the low. Yeah, so
you lost?
Yeah, you did not take the trade. How will you be in loss?
No, if you are in the trade.
Yeah.
That's what you said before. If you
are in the trade and it went down, you're being lost.
Yes.
But if you're not in the trade and you watch it when it went down, are you even going to enter the trade at the first?
My exact question is, you said this doesn't really have a meaning. Or you said if it goes below this, then you'll be in loss. That's if you are in a trade. So since you said it doesn't have a meaning, that's because you're covering the handle. That's all. I understand.
If you want, you can just draw a line like this. If you want, you can just... The point is, you should just understand how this is where you are looking to enter the trade from. There's some ICT traders, all they do is they just draw a breaker block or something like this. And then they leave you. So once Angel should just come here, you take their trade. Not profit trade. More money. Alright, so now let's do this. Yeah? This is fair value gaps, and you've understood what an imbalance is. We kill two birds
With one stone.
So the difference is just simple. An imbalance is more bigger, and fair value gap is usually true. So, and again, please don't go and see an imbalance and tell me that it's fair value gap. You understand?
Okay, name your two websites. This.
This is an imbalance, clearly.
Yes.
It's big.
Fair value calculation.
Let's just say this is a fair value gap.
Okay, what you check is not how long the candle is, but the gap at the side.
The gap. Now, for example, let's say, when this happened, one candle came and then covered some parts to this place,
Yes.
then go up. Then you mark here like this. That's before the fair value gap. Sometimes you'll be impressed me, sometimes you vex me, sometimes you know the move, so they manage. Abi? Liquidity. So once a layman hear the word liquid, now what will come in more? Anyways, if people that are into like finance, economists, bankers, traders hear the word liquidity, what comes to their mind first? You don't know. This you are a layman, right? Or a laywoman. Alright, whenever like people in finance, like economists, financial markets, like traders and whatever, when you hear the word liquidity, it means man, simple. Yeah, for me. More of this. Alright, so whenever you hear the word liquidity, it simply means what? What?
Money.
Liquidity means money. So now, types of liquidity. Types of what? We have buy-side liquidity. So we'll be using LIQ to simplify it. And whenever you see LIQ, it means liquidity.
Nice.
Liquidity, sell-side liquidity, buy-side liquidity, and sell-side liquidity are how to spot us liquidity areas in the what? Markets. And liquidity openings was?
One.
How many times of the meeting to you?
Two.
How did I tell you?
Buy side liquidity, sell side liquidity. Follow equal high.
Okay, what I call now equals and swimmers and swimmers.
Me too.
They are how to like those things. If you see an equal low on the chart,
When the loan equal.
and it's an example of what? If the lows are equal to the downside, is an example of what? I don't.
Now it.
Okay, it's an example of what? Inside here, inside.
Sell side.
Yeah, an example of sell-side liquidity. When equal is low, but to the top side is an example of what?
My side.
Good.
So
So equal high is an example of in buy side. Now let's focus. Now, equal high is an example of a buy side liquidity. Equal low is an example of sell side liquidity. And that's it for today's class. Okay, let's see this big.
yeah, no question.
Okay.
Thank you.
You are. Easy. So,
Nothing. I'd like to be class now. It's this. Okay. No need some. Understand.
we'll do the practical later.
Today, these two lovebirds will be playing a fun game of Guess That Word. The rules of the game is simple. One player puts on a headphone with music and the other player is given a word. The player with the headphones has to guess what the other player is saying to win a point. If he guesses it wrong, he loses a point. If he guesses it right, he wins a point. Enjoy.
Skin.
Just better of us. Very complimenting. Would
No
I
compliment. I'm just telling you.
I don't know what you like, man. This one I tell my skills. You see me on the streets. You want to stop me?
Small chops champion. Small chops champions.
Small chops.
Champion.
Small.
Champion. Champion.
Small chops.
Champion. Champion. I can't say.
Small chops.
Champion.
Temple.
Champion.
Hmm?
Champion. Oh my god. Champion.
Tabloid. Inside ball.
Champion. Champion.
Tap. Inside ball.
Champion.
Small chops.
Small chops. Champion. Champion.
Davino.
You have 8 seconds.
Champion. Champion. I can't sign you. Champion. Champion.
Sharp.
Your time is up. Time up. Small chops champion.
But I try now.
Yeah, you try.
Small chops.
Devino.
Small chops champion.
Yes.
First plate.
But it doesn't rhyme.
Yes.
But you see now, Thingy Mouth should get it. Because I know how to use mouth to give expression.
Are you talking?
Banana. Banana.
Pasta?
Banana.
Est?
Banana.
Fried?
I want that. Banana.
Pasta?
Bas. Na. Banana.
Pariaria? Talk.
Banana. Bread.
Are you even talking?
Banana.
Like you're supposed to.
Stop shouting.
Are you talking or you're whispering this stuff?
I'm talking. I'm shouting to you.
But say it again.
Banana.
Paria.
Banana bread bandit.
Basmati.
So you see that I tried more like this girl.
Pa.
Na. Ba.
Ba.
Na. Ba.
Ba.
Ma.
La.
Na.
Ya.
Ba. Na.
Battery.
Time up.
Ba. Na.
Banana bread bandit.
It's easy, but you saw that you made mistake, right? Ba. Na.
I thought you said pa like P.
Yeah.
Peas. P. Pa.
No,
Pa.
it's
Sure,
pa.
ba-
Like, do you see the way I say it?
Ba.
Ba.
Na.
Na.
Then I'm doing like,
Really?
na.
It now sounded like.
You said just follow.
Yeah, do you understand? Yeah, tell me. Power bank. Power. Bank.
Power bank. I know get it. I got it. See that play blue. See that play. Last times all these things, you understand? Even the first one, small chops. Say,
Oh my god.
me like this, if I do on intelligent level, you understand? Take your turn. Budget. 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 Budget.
Pushes.
Budget. Budget. Budget.
Pull the trigger.
I talk two things, so this girl don't talk three things. You see, women, la hawlo, la kopa.
Stop.
Budget.
Prostrate.
Budget. Budget.
Bone straight.
You see that the problem is not from
Am I correct?
budget.
Eh?
Budget. Budget.
Pushes.
Like bo
Bo.
jet. Bo jet.
Budget.
Correct.
You understand now? Abu Gaya de Ganani. You understand now from brain. Why is it that if you say your own, like I'll just answer it once? Well, that's you.
Oh my god.
Are you
Lock in for a nigga.
All right. 3, 2, 1, action.
Karaoke. It's on brain.
Calorie.
Karaoke.
Karaoke.
No. Karaoke.
Say it correct. You got it.
Karaoke.
You got it.
Karaoke.
You got it.
I got it.
Karaoke.
And now, let's sit up, play. Let's sit up, play. Me, I'm good, like when it's come to really lips. You understand? Because I will do my practice then in school. You understand? Once you tell person, you know, saying a B. You understand?
Yeah. Okay. We have 2 more to go.
That time in school, we don't need to talk.
You are.
I can define biology just by lips. That time I will understand. In school, that time. Yeah, I know the stress. You know this kind of thing. I'm not stressing. Mosquito.
Mosquito.
Mm-hmm. She don't get sense. You understand that kind of thing? She don't get intellectual. You understand? She's tapping from grace.
It's tapping from grace.
No, lose. Don't do.
Alright. I'm going to say it easy, okay? So it's laundry.
She's not ready.
Laundry.
Ostrich.
Laundry.
Clothing.
Laundry. Laundry.
Laundry. Sit down, play. Laundry.
The way he felt it like ostrich.
That's the last one.
Longreach.
Finally.
Long.
Go on.
He won.
Oh no. Oh wow.
Ostrich. If you vex me, I'm just gonna ostrich.
Alright guys. That's it. Alright guys. That's it for today. See you.
Next time. Bye.
Yeah, bye-bye.